When a company lists on a major exchange, it can eventually be added to benchmark indices, the Nasdaq 100, the Russell indices, or the S&P 500. Now, that matters because trillions of dollars are invested through passive index funds. Now, these funds don't decide whether a stock is attractive. They simply follow the benchmark. So when a company enters an index, passive funds have to buy it. Historically, newly listed firms had to wait months before qualifying. The idea was to ensure enough liquidity to absorb large institutional buying. But the rules are changing. Nasdaq now has a fast entry provision, allowing newly listed large caps to be considered for the Nasdaq 100 just after 15 trading days. FTSE Russell has also shortened its waiting period, arguing that the old rules were designed for smaller IPOs, not companies already worth hundreds of billions of dollars. For SpaceX, Anthropic, and OpenAI, that means passive buying could begin within weeks of listing, and that could provide meaningful early support for their share prices. There is one important catch: free float. Most indices weight companies on shares actually available to trade, not the full valuation. Now, in SpaceX's case, only around 4% of shares may be available initially, so the early index weight will be far smaller than the headline valuation suggests. As lockup periods expire subsequently, more shares enter the market, creating a rolling wave of demand and supply over several quarters, rather than just one single event. There is also a second effect. Now, every dollar passive funds puts into new entrants has to come from somewhere. To buy in, funds may need to trim other holdings, meaning these IPOs could shift capital flows across the broader market, not just their own share prices. The deeper risk is concentration. Now, all three companies are closely linked to the AI boom, and AI-related stocks already represent a large share of the U.S. market. If enthusiasm holds, well, fast index entry could magnify the upside. If sentiment turns, well, the same mechanism could transmit pressure just as quickly on the way down. The U.S. market is deep enough to absorb the initial listings. The real question is whether it can do so smoothly, because once these companies enter major indices, millions of investors may end up owning them automatically. Not because they chose those stocks, because the benchmark did. For CNA Explains, I'm Roland Lim.